So let's go to the next question. What currency pair really matters? I guess I showed my hand that perhaps the ruble is far more important in the future, and the yen is far more important in the present, leaving the euro and yuan to battle it out, sort of a second fiddle against the dollar, which is still very much like the yen in the forefront of the concerns of the authorities in China. So let's go over the yen. This relationship, more than any other, seems to show up in great detail when you listen to Chinese authorities at G20s or other international gatherings, and as they discuss the great devaluation of the yen from Abenomics and Kuroda's BOJ quantitative monetary expansion. From 2012 to really January of this year, 2016, the yen was on a tear, weaker. This was a beggar thy neighbor-like move in the minds of many people in Asia. And the Chinese verbalized that very clearly. And you can see the pain that this devaluation of the yen did to the competitiveness of the China renminbi against Japan. There were a couple of things that Japan really greatly benefited from. One was a flood of Chinese tourists. The rising middle class in China started to go to Japan to buy goods that they thought were superior, from toilet seats to makeup to food. And this continues, but over the last 6 months, this has really turned notably. And one of the slowdown effects that you see in Japan, if you look at their trade statistics and growth statistics, has been the notable drop-off in the Chinese tourist sector in Japanese growth. But I don't want to overstate that. Ultimately, there's clearly in this chart a level of stability that you see that goes back to 2007, where if you look at where we are now in this relationship, between, let's call it 14 and 16, I think the Chinese authorities are okay with where yen is. That makes this move from 100 to 104 in this week in dollar yen a little bit more problematic. And I would expect that the dollar yen relationship move will mean that the dollar renminbi move may follow, albeit at a slower rate of devaluation. But this is something that I'm paying a lot of attention to. I'm not going to read all the statistics, but this was a move from 2012 to 2016 January, over a 50% devaluation, really over a 70% devaluation. It's still, significantly a 50% move from the peak to trough. Let's go on to the next currency. Well, the euro has become, as one commentator would say, a perpetual crisis. Ever since 2008, the euro, which looked like a fine project, likely to surprise everyone in its stability, to have a monetary union without a political one, has proven to be just less important to the world than anyone expected. And that comes quite clearly across in this chart with the renminbi. So what we have here is that the renminbi has appreciated pretty significantly and only modestly has lost 14% against the euro since 2015. It is not really at all where it was in terms of competitiveness to Europe, like it was back pre-crisis, or even in the pre-Greek crisis, or pre-Draghi days of doing whatever it will take quantitative easing. The euro really needs to either appreciate or the renminbi needs to devalue in order for the market share that was lost by the Chinese to the euro ever comes back. And, I'm looking at this, and it seems that we're not yet in that zone of stability, but it may well be that if you do a chart, we may not get there. We may just have changed the paradigm forever in the relationship of China to Europe, and it just is less important. This is something that we're going to pay a lot of attention to, and it makes the ECB taper talk that much more important, and the relationship of its ability to trade, closer to 110 rather than 125, which is where I think the Chinese would feel closer to the 2012 levels, a sense of stability. Let's talk about the currency that they don't talk about, the Korean won. Now, Korea has a very special role to play in the Chinese trade relationship. Korea has actually the largest trade surplus with China. And this trade surplus comes from all sorts of things, partially because the Chinese are repackaging a lot of the exports to the West, partially because some of the Korean goods are just top-notch. Again, I would highlight the makeup industry in Korea. The Chinese relationship with Korea, however, if you look at the Korean won to the Chinese renminbi, that relationship actually looks incredibly stable, if not outright boring. And that tells you something. And maybe one of the reasons why it's not part of the index is that there's no volatility, that they actually think that this relationship is stable and politically sustainable. That's very interesting. I also think that, the move pre-crisis, post-crisis, and this island of stability that we're highlighting is something that suggests that the Chinese authorities aren't so concerned about what happened pre-2008, and that they really are more concerned about what happens from 2010 on. Important to put back into context of the euro relationship, the yen relationship. Well, let's go to the ruble, which, if there's any currency that has devalued significantly, even more than the euro, it's the ruble, and perhaps the Brazil real as well. But Russia has a very special relationship to China in that Putin has played the China card, just as Henry Kissinger of the Richard Nixon days pulled the China card against Russia. So the relationship of the ruble to China has been one built on increasing oil and natural gas relationships, on increasing financial ties, where Russia is looking to raise capital in the Chinese financial markets. And all of this stems from the oil crisis and from the Crimean sanctions. The ruble has devalued significantly, and the relationship of trade between China and Russia still is surprisingly small. It's a rounding error against the other 13 currencies in the basket. So when I look at this, this is a currency relationship that is yet to be defined, but one that is highly volatile and makes the renminbi index have an oil component to it that perhaps is not unintended. If you held a gun to my head and said, Bob, what is the biggest prediction of where the Chinese authorities want to go with the renminbi? It is simply to have energy and other commodities denominated in renminbis rather than dollars. And the Russian ruble is part and parcel of that enterprise and that goal, which could happen as soon as 5 years from now. Why do I say that? Well, the US is becoming increasingly energy independent. And if the US starts to export natural gas and oil, the people that export a commodity generally don't get to price it in their currency. Let's go on to the next question. But before I get there, this chart came from the New York Times, and Malcolm and I discussed this at length, but it's a little confusing, but perhaps worth spending some time thinking about how these trade relationships between Japan, Korea, and China, and where things are built, where the things are repackaged, where things are exported from, and how the currencies matter, all come out very clearly in this chart. And you can see that the relationship between the Korean won and the Chinese renminbi has been really quite stable in this 2012-2015 period. But the relationship with the yen has been incredibly destabilizing. And it makes the relationship of dollar-yen that much more important to the way China views stability in the entire region. Again, I don't want to overemphasize that relationship, but it does look to be the driver of volatility in the dollar-renminbi relationship. And you can see that the world was a lot simpler back in 2000 and 2004, pre really the takeoff of the WTO relationship. And the Chinese clearly have worked very hard at their relationship with the Korean won, and less so with the Japanese.